question is from the line of Sanjesh Jain from ICICI Securities. Sanjesh, you have now been unmuted. You may go ahead and ask your question after unmuting yourself.
Hello.
Hi, Sanjesh, you may go ahead now.
Sanjesh, you're not audible. Are you still on mute? We can take the next and then. Move to next.
Why don't we take the next question? Yes.
The next question is from the line of Ritesh Gandhi. Ritesh, you have been requested to unmute. You may unmute yourself and go ahead and ask your question.
I actually don't understand. This is obviously a loss-making entity, actually, which we've acquired. So just want to understand the synergies and the path to profitability and the confidence we have with regards to achieving profitability and the rough timelines on this.
Yeah. Hi, Ritesh. Now, as I said, firstly, we'll look at the market opportunity. The entire CPaaS is a fast-growing market, and within CPaaS, beyond SMS, the market is growing in non-SMS channels like voice and other means of communication. So the market is growing, and that is a major reason. The second is obviously this platform is in terms of proven, in terms of scale and the customer base, as I said, complementarity on geographies, and aligns with our ambition to move and position in the customer interaction platform. Yes, this entity today is loss making, but given the scale and the complementarities and the synergies available, we are quite confident that we can make it EBITDA positive in the near term, as I said, and to a double-digit EBITDA in the medium term.
Got it. And we expect the profitability to be driven by synergies on the cost side, or just the revenues are growing, which actually in turn increases the operating and leverage in the business. Just for understanding.
Sorry, Ritesh, can you repeat that question?
Sure. I'm saying that the profitability will be driven by effectively the synergies which we can drive on the cost side of things, or it's like effectively a revenue actually growth which is going to lead to operating and leverage and then increase in the profitability.
It will be both. As the market grows, then we obviously will need to grow, and there are so much of growth potential, which is one. And the second is there are other levers available in terms of synergies, right from the buying synergies to the other infrastructure and other synergies that we can realize that which will help us to deliver the margin.
Got it, understood. And just the last question is that as we had outlined in the Investor Day, the aspirational revenue targets of ours, I'm assuming those are like organic, and anything inorganic will be actually incremental over and above that, or should we be considering this in the aspirations as well?
No, I think I mentioned during the Q&A at that time itself. When we put that aspiration up, that aspiration, obviously, we had, and we also mentioned that we are developing a set of pipeline for M&A, but we are not going to be acquiring to hit the aspiration revenue number, right? So it is not. So therefore, I can't say both of them go hand in hand. And I think Kabir in his presentation called out the rationale and the logic that we would use to how we would go about doing this. And as you saw in the case of Switch, where we showed there are complementarities available because of the market and the products and everything else. Similarly, here there are a lot of complementarities available, and the strategic rationale is quite strong, and that is the reason what we do.
Got it. Okay. Thanks. I'll just rejoin the queue. Thank you.
Thank you.
Thanks, Ritesh. The next question is from the line of Mr. Nishit. Nishit, you have been unmuted. You may go ahead and ask your question. Yeah, you are audible.
Okay, great. Firstly, congrats to the team. Looks like a really, really good acquisition to me. And many congratulations to the team. Very, very excited for this. Second, I just wanted to understand, this is my understanding of the space, and just would love to get your thoughts on it. So, I see most of Kalera's clients right now seem to be large enterprises, right? And they do not, and it seems like there is a big opportunity on the ILD side of it, right? Wherein you have so many countries where you have a proven platform, and Tatacom has the relationship with some of those very, very large customers, which are very big ILD customers out there in multiple countries. Is that a big opportunity which can come with you guys, for you guys?
Yeah, Nishit, I don't particularly know what you mean by the ILD customers and presence, but largely, yes, as I said, there is complementarity from their focus on large enterprises, and as is ours, right? So that is, we are all addressing the similar segment of market. Second is they also have a large global play, but shall I say more focused around the US, and they have good interconnects in the US. Focus obviously in India and the Italian market. From a market complementarity perspective, Tatacom has a much broader footprint in terms of the markets, right? Both in terms of our infrastructure and buying capabilities, as well as our presence, for example, in APAC and in broader Europe, even beyond Italy and so on. So those complementarities will definitely help us to drive the synergies, both in terms of go-to-market as well as the synergies in the infrastructure footprint, as well as the buying relationships that we can leverage each other from.
What I meant by the ILD market was some of the very large hyperscalers like Amazon, Meta, Google, and which have multi-country operations, and which are very, very large accounts, and which prefer to work with a stable platform across countries, right? And
Right.
And they're both Kalera and you seem to have the tie-ups with the telcos, right? But somehow I didn't see them as very large customers. So that's where I thought was a very big opportunity, because given Tatacom's, given that the sector is going through, this sector has there is a big trust is a very important factor, and Tata brings in a lot of trust in that sector. If is that a big opportunity was the question, because it looked like you have very, very strong enterprises as customer, which is very difficult to build, which is again a very, very good complementarity that as you were talking about. So that was the opportunity I was talking about.
Yeah, I think sure. I think some of the big OTT like players and hyperscalers are our customers, and there is an opportunity there. But yeah, I think that opportunity, I think they're also present in certain accounts of that nature, and we are present in more number of accounts, if you will, and that certainly presents as an opportunity. The way I would see that is akin to our core connectivity portfolio, where these are very large customers having a buying power similar to a large player, and we can get bulk.
Yes.
That may not be at the level of margins that we might get from other enterprise customers, but yeah, certainly I think that is an opportunity that we will work on. But broader than that, the other enterprise segments like the banks, large retailers, the digital commerce companies who are big users of messaging and now moving to more of omni channels. Those who want to, not to have a fragmented buying experience of SMS and voice and trying to integrate. Whereas, even in our case, the Digo, the vision was to offer a more converged solution, a more omni-channel solution. So therefore, there's a lot of synergy both in terms of the vision, roadmap, and capabilities, and that presence is a great opportunity.
That's amazing. And Lakshmi, you get a 640 member team along with it. So is it fair to assume that a lot of those people have agreed to carry on out there, and also the team you would, while building Digo, also you would have a very large team inside. So again, will the roadmap will now be led by Kalera being the specialist out here, or will we jointly driven out there?
No, we'll work through those, Nishit. We've just announced it, and it will take time to close the deal, and only after that we can really enter into those conversations more meaningfully. But we do have a vision, we do have a roadmap, but it's too soon to talk about.
Which is fair. And one last thing, and is it also, is it right in me to understand, right now Kalera was just selling one particular product, right? But with so the salespeople of Kalera can now sell a full suite of services to the entire all the relationships that they have in both Europe and US. Is that a fair way to also think about it?
No, Kalera, not just SMS, they already have capabilities on multiple channels, right? In terms of video, in terms of voice and other channels. So they have that capability in the product that they have. But yeah, I think once we consummate the transaction, I think our ability now to take it to a broader enterprise segment where we have presence in large customer base and have a more holistic conversation in helping them to improve their customer interactions or consumer interactions will definitely improve.
Well, this is very helpful, and all the best with the integration, Lakshmi, I think.
Thank you.
Thanks, Nishit. I'm unmuting Sanjesh. Sanjesh, you may now go ahead and ask the question, post approving your mute. You're unmuted now, Sanjesh. Please go ahead and ask your question. We can hear you, Sanjesh. Please go ahead.
No, Sanjesh, you're breaking up. Sanjesh,
you're breaking up.
Sanjesh, you're breaking up.
The next question is from the line of Mr. Mayank Babla. Mayank, you have now been unmuted. Please go ahead and ask your question. Yeah, Mayank, you're audible now. Please go ahead.
Yeah, thank you for taking my question. The question is around, the debt, the net debt of the company is around $150 million of Kalera, and a net EBITDA of around $18-19 million. So my question is, what made this deal so attractive? Is it the clientele or the uniqueness in the platform? What made it so attractive to go for this deal?
Yeah, Mahant, I think I've outlined the opportunities and the rationale. Essentially, the market opportunity where CPaaS as a market is growing fast. We have an opportunity to strike now with a player who has got scale in multiple geographies. While we have strengths in India and presence in other markets, they already have a reasonable scale in markets like US. And to get to that level of scale organically for us will take time. So it brings, therefore, certain market strengths, ready-made market strengths besides the platform that is there. And third is there is a vision to build out the higher order of capabilities in terms of more intelligence into CPaaS, and that is an aligned vision that together we can unlock greater synergies. And the point on net debt is noted, and that's where the enterprise value what we called out is included in the net debt, taking that into account.
And so, what would be the plans with this debt will be kept on the books?
Kabir, do you want to take that question?
Yeah, we will assume the debt of the target upon close. What will happen, whether the bondholders would like to continue, would like to exercise, any rights that come from as a result of the offer document is up to the bond. I can't speculate on that.
Sure. Thank you. I will get back in the.
Thanks, Mayank. Sanjesh, the next question from your line. You may go ahead and ask your question, please.
First, on the target business itself, can you help us now?
Sanjesh, we can't. You're breaking up. Perhaps if you can send your query online and see if I can respond looking at the query, Sanjesh, that'll help because you're breaking up.
Is there any learning for us, or we wanted to plug certain products profile from the Digo?
Sanjesh, sorry. Can you hear me?
I think
we're not able to hear you. You're breaking up quite badly. And so I was suggesting, Sanjesh, if you can message the question online, we'll try to read it and respond to that if you're able to hear us properly.
I think he's probably not even able to hear us. He's just continuing with the questions, which is not coming through. Why don't we move to the next question here?
The next question is from Mr. Santosh Sinha. Santosh, you may go ahead and ask a question. You have been requested to unmute.
So the overall margin of the company, because the guidance was somewhere around 23% to 25% for EBITDA margin of Tata Communication. So what will be the impact overall? And will this overall target of 25% change?
I can answer that. Firstly, I think I'll be tired of repeating myself. It is not a guidance and it is not a target. We've always said that 23 to 25 is our long-term ambition for the margin profile of Tata Communications, and we stick to the 23 to 25. As a result of this acquisition, when we do the post-close, I'm sure you can do the mathematics. This business is EBITDA negative, as we speak, with a $339 million of top line. It will have, of course, a dilutive impact on the Tata Communications, EBITDA performance. But that we believe is going to be a short-term, hit, and we intend to have this business in the near term get into EBITDA break-even, and in the medium term, short to medium term, this should get into double-digit EBITDA growth. So we can then get back to our long-term ambition of 23 to 25, which we continue to maintain. So we will, as we mentioned in the investor day, I will repeat, we don't mind departing from this 23 to 25 range for good reasons and for a short-term period. And this is definitely one of the strategic, rational, driven acquisition for which it warrants us to depart from it for a short-term period.
That's helpful. Next question is regarding this approvals actually. So, how much time you think that it will take, and what will be the key approvals that will be required, and will the entity be delisted from the stock exchanges?
I will start off and then maybe I can ask or Troy. Troy is also there on the call, our Chief Legal Officer. Troy, if you can just unmute Troy and
Can you hear me?
rather have Troy answer this question.
Yes, this is you need to go mute. Okay, can you hear me now? Apologies. This is a U.S. public acquisition, and they will. It is also a take private acquisition, such that at closing they will no longer be listed.
Yeah. Thank you. Thanks for taking my question.
Was there another part of the question I didn't hear?
What are the approvals?
The approvals, there are a number of approvals, most importantly, the shareholder approval. There are also certain competition authority approvals that will be required, along with CFIUS, which is the Committee on Foreign Investment in the United States. Those are some of the major approvals. We expect it to be a 6 to 9 month approval process.
Thank you. Thanks a lot.
Thanks, Troy. The next question is from the line of Mr. Dipesh Mehta. Dipesh, you have been requested to unmute. Please unmute and go ahead and ask your question.
He's not unmuted.
Sorry, we can't hear the question in this room. Can you repeat it?
No, he's not. He's still muted, I think.
Yeah. Ask Dipesh to unmute. He's not.
Dipesh, please unmute yourself and ask your question.
The product mix of the business which we acquired.
Dipesh, request to please, Dipesh, we missed you from the starting. Could you please restate your question from the beginning?
Am I audible?
Yeah, Dipesh, please go ahead and ask your question.
I just want to get sense about the product mix. You said about the company as omni-channel kind of platform. So if you can just provide some sense about how the product mix is currently, and with the synergy benefit, how you expect it to evolve over next 3 to 5 years?
Yeah, Dipesh, I think we'll have to see what is their publicly stated information as they are listed. We probably can't divulge more than what they are divulging in terms of the mix and so on. We do have SMS and non-SMS products in their mix. But in terms of the future, as I called out, the market, SMS is growing, but the non-SMS part will grow faster. And with their capabilities and what we are doing ourselves, we think we can leverage on that market opportunity to grow in the market.
I just want to understand, let's say from Tata Communication existing capability perspective, what portion of business would be very similar to what Kaleyra does? If you can provide some sense, and then how this will overall integrate with both the entity, and because you earlier indicated some of the synergy benefit, particularly on the bulk buying side, I understand. But in addition to that, anything which where we have similarity in operation and we compete against each other?
Yeah, I mean, we launched our DIGO platform last year. And underneath the DIGO platform is what we call it our messaging capabilities, the A2P messaging capabilities that we have, the voice capabilities, which had programmable voice elements and others. So those are the capabilities. We are a relatively new entrant. We were having international large A2P in a wholesale model, and in the enterprise segment with the launch of DIGO. From last year, we've acquired a good set of customers and growing. So in terms of the capabilities, product capabilities, I would say Kaleyra is ahead because they have been in the market. It's fairly mature. Their platform carries a lot more volumes and scale now, so it's a lot more proven in that sense. That's a big advantage for us. And in terms of other synergies, I did call out. There are buying, which you mentioned, as well as other infrastructure synergies that we can look at in terms of the SMSCs and where we have the engineering to deliver these messaging capabilities. So those are the places where these will work together very well.
Okay, so last two questions from my side. I think first about the process, I think I missed the answer what you gave about the transaction flow, how you expect it to play out. And last is about the Digo platform which we referred. Largely we have currently presence in India, or we have presence outside India also organically?
Organically, we have presence in India. We have presence in APAC market. As I said, we launched last year. So these are the two places where we have acquired significant amount of customers. In Europe and US, we have opportunities that we are pursuing, because this was a launched product in those markets as well. I'm sure what you're to receive all approved with the transaction.
Thanks, Dipesh. The next question is from Mr. Mihir Manohar. Mihir, we have requested to unmute you. You may go ahead and ask your question. Mihir, please go ahead and ask your question.
Hello, am I audible?
Yes, Mihir.
Yeah, sure. Yeah, thanks for giving the opportunity. A break-even kind of an EBITDA number in the near term and double-digit kind of a number in the medium term. If you can throw some more light on the cost part of the piece, what kind of are you looking on the cost part? That will be really helpful.
It's a little premature for us to get into every detail of the cost. It's at the end of the day, it's a listed company, and the due diligence process only allows so much, insight for us to be able to understand their cost profile. We do believe that since we are also on the journey with Digo to invest, in there, and Kalera has a very well-established platform. Just Lakshmi mentioned, they carry a lot more volume, on their platform than us. So it's very well established. So we do believe that there are certain investments that we would have otherwise done to develop, Digo may not, be required, and we could leverage, Kalera's capabilities. And now all of that is something, as we close the transaction, is when we will probably get insight into in a lot more detail, and it will become clearer. We have made certain assumptions in the business case on the basis of which, it made financial sense for us to go ahead with the acquisition. I don't have any more color that I can give you other than that.
Sure. And just one more question was there on the valuation part of the piece, $100 million valuation. So just wanted to understand the rationale behind it.
Well, it's a good value for both Tata Communications and Kalera, shareholders. I can't say anything more than that, which is there in the public domain already, to what the share price was trading and what the enterprise value is. And this is, if I look at a 30-day, VWAP, it's a 25% premium on enterprise value. If I look at last closing price, it's a 17%, premium on enterprise value. So there are multiple data points. It all depends on how you actually skim it. We look at from enterprise value, and these are the two data points that I can give you. And it's a 0.8x, EV to sales multiple that we have actually, offered to Kalera, which we believe is great value, and both of the shareholders have a win-win out here.
Sure, yeah, that's it from my side. Best of wishes for the transaction. Yeah, thank you.
Thank you very much.
Thank you, Mir. Thanks, Kabir. We have a couple of online questions to address. The first question is from the line of Mr. Avnish Tiwari from Eastbridge Capital. Avnish has asked, Kalera had a minus 15 million EBITDA in CY22, but adjusted for stock-based compensation and one-off costs, it was plus 19 million in CY22. Are you using the 15 million negative as EBITDA base while aspiring for EBITDA break-even in the near term? How will these stock-based compensations and one-off costs move?
Yes, we are taking the 15 million as our base, Avnish. The stock-based compensation and is something which is WIP and is something which needs to be discussed both internally, our HR teams upon close to decide what we will offer at that point in time. We need to offer a competitive overall compensation package for the Kalera employees to remain engaged, and therefore that is something which is work in progress.
Thanks, Kabir. The next question is from Mr. Anmol Grover. Kalera's CY22 P&L showed a 50 million impairment. How much of these write-downs are still to come through, and what are these related to exactly? How do you plan to reduce the debt of the company? There's one follow-up question which you can address after this.
Well, these are related to their older acquisitions that they have done in the past. I think it is notably, from Engage. But I don't have any color on going forward. I'm sorry, I'll not be able to give you a forward view on it.
Thanks, Kabir. The follow-up question is on the EBITDA margins that we plan to break even in the near term and increase to double-digit margins in the medium term. Could you quantify what do you mean by the near term and the medium term?
Well, near term is near term and medium term is medium term. If I could have quantified that, then I probably wouldn't have used the words near term and medium term in the first place.
Thanks, Kabir. The next question is from Sanjesh. He's typed his questions and sent across. What is the difference between DIGO and the target company? What is the contribution of the SMS and the WhatsApp business?
So what is the difference between
DIGO and the target company offerings? Yeah. What is the contribution of the SMS and WhatsApp business to the product portfolio?
From the offerings perspective, as I mentioned, at A2P messaging, WhatsApp, voice, and all of those are similar. The difference being that while we have launched our product and beginning to acquire customers in the early stages of some of these areas which are bulk A2P, Kalera has a platform that is already proven and has scale and volume that it manages. So that would be the difference. In terms of the second question of WhatsApp
and the contribution of SMS and WhatsApp business to the revenue line.
So as I said, I know I don't think I can give the color on that as for them as to what their mix is. While we have some information, but I don't think I'll be able to give that color of SMS and WhatsApp for them at this stage. Yeah.
Thanks, Lakshmi. A follow-up question from Sanjesh. Peer gross profit margin is 25 to 50%. How is TCOM planning to bridge the gap? Are there synergies possible as Tata Grom has strong relations with global operators?
This is the gross margins.
Yes, gross profit margins.
Yeah, I think our model and what we are looking to is at the gross margin levels. We should become much better as we get and leverage the buying capabilities of both the companies, and also as we increase the non-SMS part of the mix, right? Whether it's the voice or other channels, that mix will definitely improve the margins better. Those are the levers available. And obviously, below the NR line, there are other levers available to deliver the EBITDA margins, the double-digit EBITDA margins that we have called out in the medium term.
Thanks, Lakshmi. This brings us to the end of the call today. May I request Lakshmi for his closing comments?
Thank you all. Thank you for joining this at a short notice. We are very, very thrilled about this transaction. This presents a major opportunity for us to establish a customer interaction platform meaningfully in a very fast-growing market, not just in India, but other meaningful geographies like the US, APAC, and Europe. So with that excitement, I will sign off for now. Thank you.
Thanks, Lakshmi. Thanks, everyone. A recording of this call will be available on our website in the next 24 hours. You may refer to the same. Thank you so much. Any other questions may be written down to investor.relations@tatacommunications.com. Thank you. You may disconnect now.